Meantime, let me bring in SlateStone Chief Equity Strategist, Erin Gibbs. Erin, there's so many videos like that floating around there, right? So there was one that had Michael J. Fox, and some of the other ones. I didn't recognize any of those folks. Anyway, all right, so before we go into depth about this what's happening here, obviously it's Fed week.
Yep.
And so far what's happening is this is traditionally what happens. With two or few cuts, it's the cyclicals that do well, and this is before the Fed starts to cut. So this is already happening, right? This is already happening. Essentially, though, if the Fed keeps cutting, at some point, defensive names will start to come on. You see that sort of playbook still in play?
We saw it a little bit in August. September's been a little more questionable. I think how fast we ramp up, and again, the feel of like how the economy really is going, since we've had so many different estimates and recently, especially around unemployment.
Do you expect at least 4 rate cuts, though, between this year and next year?
Absolutely.
Right.
Yeah,
right.
Absolutely.
So for you like the idea that if that's the case, you say small caps is where we should be looking.
Right. So one of the things we've looked at is, so once you get to that 200 basis points of 2% of cuts, and we're already at 1%.
You're adding in the cuts from last year.
Yeah, I'm adding in the cuts from last year. So as long as we're still in that trend, because they haven't increased rates, when you finally get to that really meaningful type of cut, you do see some outperformance in the small caps. And so the blue line is the small, the orange is the large, and the spread, the 6 months after that that final 200 basis points, the average spread is about 8% for small caps. So small caps outperformed by about 8%. The only time they failed, there was one of the 6 periods where they underperformed, was in 1981, but all those other
all the
years,
other times they were down less than the rest of, or up more each single time. So at some point, and we keep doing this, right? We've been doing it for a couple of weeks now. And small caps, they come to life, then they fade. They come to life, then they fade, right? But some of these individual small cap names are really killing it already this year.
Absolutely. We've got some real winners in here.
All right, let's talk about this. Again, this is another way of looking at this. This is more from a valuation point of view.
Right.
This is taking out the negative names, right? Because we know 40% of the Russell, they don't make money. But if you took them out, profitable small caps came into the year significantly undervalued here. And that's something I think value investors are looking for.
Right. And this is the reason why I'm talking about, look, if we get these extra rate cuts, that's really what could kick off that small cap outperformance. But you also just have a very safe entry point. They're super cheap valuations.
Great risk reward.
Great risk reward. Great risk reward. So I know we've been talking about small coming into favor for a while. They've still been underperforming all this year, but they are really set up for outperformance. Let's say 2026. Yeah,
let's look here. So a couple of names. Let's talk names. Let's get to the nitty gritty. Celsius was amazing. It was one of the hottest stocks for a long time. A series of bad news things have happened to them. All of a sudden, they've come back in the last couple of weeks. What's happening there?
So they basically acquired Alani Nu. It's basically a health wellness drinks, and it also has a lot of female clients, it appeals to a lot of women. So they're diversifying that way. Pepsi increased their ownership of Celsius, and that also
was the thing that started to really move the stock.
Yeah, and that really moved it. So between Alani Nu and between the Pepsi distribution, that's really set the stock off.
Astera Labs, by now, all of our viewers know this name. We talked about it a lot with different guests. My subscribers in it. It just feels like it's been an unstoppable train. You still feel like it's got a lot more upside.
Absolutely, because it's what it does is help with bottlenecks as your AI grows, and this is exactly the type of semiconductors and semiconductor type of company that you would want as we talk about these mega deals such as the Oracle and OpenAI.
I want to ask you about this. You had some interesting comments about this Oracle deal. Sort of, it could be history's biggest flop or biggest transformation. And I mean, you bring up WeWorks, Theranos, like you're scaring the hell out of me. Iridium, you're bringing up some massive failures in here. So which one is it?
Well, there are a lot that you could pick from. So look, it's just when you do the math, it means that they need to have $24 billion in profit a year in order to actually meet this contract. They simply don't have that profit. Even with their revenue growth, it just mathematically at this point seems insane. And that's why I'm comparing it to some of the biggest flops, because it's just this pipe
Because
dream
of the
where
amount of success that's already built into the shares.
yeah, and like the amount of money that they're going to have to make in order to meet this contract, the amount of growth that they're going to have to see is just so big. And so I think it does sound like a Silicon Valley pipe dream to me.
Well, I can tell you right now, you're off Larry Ellis's Christmas list. That's all.
Yes, I
Erin,
am.
thank you very much. Appreciate it.